track, profits up 35%, excluding one-off from a land sale gain that was there last year. Growth gems continue to accelerate, and while we don't focus too much on profits from growth gems because we are investing to grow multiples over the next few years, the profit number here is still good at 22%. And overall consolidated profit is up 28%, excluding three one-offs. First is a gain on sale of land last year. Second is PLI gains that were put in this quarter that were for previous quarter, so that gain from this quarter has been excluded. And third is the tax payment for the SML Isuzu transaction of 217 crores, which has been excluded as well. So excluding those three one-offs, consolidated profit is up 28%, and that gets our ROE on an annualized basis to 19.4. A quick look at numbers for last quarter and this quarter. Revenue up 22%. On a year-to-date basis, it's 22% as well. And profit after tax, excluding the one-offs, up 28%. But as you look at year-to-date as well, it's up 29%. The key drivers are literally across our businesses now. Auto and Farm continuing to capitalize on market leadership. The combination of Auto and Farm up 28% from a profit standpoint. Volume is up for tractors by 32%, for Auto by 13%. A steady margin expansion, as you've seen, and we have completed the SML acquisition, which is a very strong one for us that will help our trucks and buses businesses grow significantly. TechM and Mahindra Finance up 35 and 49% respectively. More importantly, these are businesses that had a path laid out for them to get to peer average and then beat peer average after that. With Mahindra Finance now, we've seen conclusion of that first phase, and we will see more going forward. TechM on track, and there's a clear plan laid out through F27 on that plan right now from a margin standpoint and an overall performance standpoint. And talking about growth gems, what you see here is again one-off because of a tax one-off that we had, but with that profits up. More important than that is the underlying businesses, and I'll talk about three of them as we go forward. In Auto, we see revenue up 25%. As we've spoken earlier, there is an element of an EV and an ICE mix there. For EVs, it contributes significantly to revenue, not as much to profit today. It will in future. And therefore, you see the gap between 25% revenue and 14% profit growth for Auto. ESUV penetration is up to 8.7%, up 90 basis points quarter on quarter. And again, on track for the kind of penetration levels that we've outlined. And export momentum is very strong. Volume up 40%. This is a growth vector for us that we've talked about before, and we're starting to see that growth vector play out. The remarkable number on this page is SUV revenue share up 390 basis points, or almost 4 percentage points from a year-over-year basis. And LCV market share, even though it's above 50%, we still see a 1 percentage point gain in LCV market share to 53.2%. Farm, we're seeing a premium segment growth, yes, from a small base, but up 38%, but very strong operational excellence. And this is one where I would compliment the team on to really drive that operational excellence and deliver the results that they have. And we've also seen the sale of Sampo in Finland. So one of the issues that we had as we continue to prune our portfolio and continue to maintain that discipline, this is an exit that was important and that has been completed. And there you see market share of 43%, up 50 basis points year over year, and farm machinery revenue on a very good clip now, up 30% at 330 crores for the quarter. So on track again for strong growth and starting to deliver what we've expected that business to deliver. Overall PAT growth, as I mentioned earlier, 54% year over year for the same quarter. Mahindra Finance, tractor disbursements are up 41% and has gained share in that space. NIM improvement, 47 basis points. And we've talked about digital transformation in the past with a project called Udaan, which was literally a 3-year project that has been completed. Adoption is very strong in the 90 percentage plus points right now. And we're starting to see the benefits of that from a customer experience standpoint as well as from a cost standpoint. And you will see more benefits as we go forward. What we also see is GS 3% less than 4. Or less than 4.5 that we promised, but it is at this point less than 4. Assets under management up 13%, and we will now start pivoting this business to growth. We have focused a lot on asset quality, on controls, and we're starting to see results from that, and we will now start pivoting the business to much faster growth as we see the profit up 45% for Mahindra Finance. Tech Mahindra, good wins in BFSI, manufacturing, retail in a tough environment. AI efforts have been accelerated. We've launched Orion, and margin progression is on the track that has been outlined, and we will see that delivery going forward into the next year as well. TCV is up 35%, EBIT margins up 250 basis points, and excluding the one-off I mentioned, profits are up 35%. For growth gems, with Hemant coming into logistics, we've just seen remarkable execution there. And this is a business that is now being set up on a very strong track. Express business, this is the first quarter with a positive gross margin, and we will continue to see more gains as we go forward. White space reduction, there was a fair amount of white space at or warehouses that had been leased, and we've now reduced that by getting in more customers by taking out some of that space. E-commerce segment is growing well, and therefore what you see is revenues up 11%, EBITDA is up 70 basis points. In hospitality, we had some adverse weather in the past quarter, September in particular, and therefore occupancy is a bit lower at 73%. But the average unit realization is up very significantly from to 85%. And in our holiday club, Europe, we do see some headwinds there. It's a smaller business compared to the main one, so it's something that we'll have to deal with. Nothing that's concerning at this point. It's still a business that is overall a good business doing well, but we continue to work around the geopolitical headwinds that we see there. Room inventory is up 5%, membership is up 1%, but we're not focusing as much on member count as the business has talked about. It's more about the value we deliver as well as the value realization that we get from there. Real estate on a very, very strong growth trajectory. Continued GDV acquisitions, and that has been a very strong story through last year as well as through the first half of the year. We are among the top 4 now in terms of GDV acquisition last year, and have really put this business on the map in terms of a very, very strong and profitable real estate business. Higher realization in the IC business, a very healthy launch pipeline. We see the pre-sales number up 89% here, and the GDV acquired is up 3x, despite the fact that we had a good year last year for GDV as well. This is why you can see I use the word delighted by results this quarter. You just see that across all the businesses, just very, very strong execution that our teams have driven. And with that, our standard page on consistent delivery of the commitments we've made. ROE is up 19.4%. I will always give my caveat that we plan it at 18, so it may fluctuate a bit up and higher and below than 18. So do not expect 19.4 as something that would continue, because we will make investments and drive further growth. EPS growth, while we promise 15 to 20%, we are at 35% from the time that we promised this, and that rounds up the overall numbers for the group, and with that, let me invite Rajesh for the auto and farm businesses.
Thanks, Anish. So quick run through the auto and farm numbers. We'll start with farm, And as you see, the farm volumes are up 32% in the quarter, and we've gained 50 basis point share on what is already a strong market share performance, taking us to 43%. The trajectory of the market share gain, as you see in this chart, gets stronger, and in the first half, we've been at 44% market share. We hit the 70 lakh tractors rolled out milestone. Of course, this happened over many decades of both the brands being in existence. So the Mahindra brand has rolled out 45 lakh tractors, which they achieved in September, and the Swaraj brand in August achieved 25 lakh tractors rolled out. So, totally 70 lakh tractors rolled out is a great milestone to have across our two brands. The farm machinery business Anish spoke about was a very strong quarter, 300 crores every month, being able to clock 100 crores consistently was a very, very good performance, and we're seeing very good momentum come back in that business. The farm margins have been a very good story. So while we've been gaining market share over time and at a very healthy market share, so have margins been very strong. Quarter two margin of 20.6 is a very good growth over the previous year on year over the last quarter two, and a very strong absolute margin performance as well. As you can see, the core tractor margin is at 20.6%. We often show this as a standard chart, and you can see the industry growth in quarter two and a strong margin performance through the last 3 quarters as well. The profit PBIT for the quarter is at 44% growth, 1600 odd crores at a consolidated level. With that, I'll move into auto. The SUV volume growth was 7%, as Anish mentioned. There were issues related to transition, logistics, trailer availability, and of course, large portion of our portfolio holding back dispatches till 22nd of September as we were waiting for the GST transition to kick in. So that's affected the overall growth for the quarter, but we've recouped that quite strongly in the month of October. LCV, it's good news to see the category come back into growth and market share growing. We've been gaining market share, but really this is a category which has shown very slow growth over the last many quarters, and it's good to see that come back. And we're seeing that more strongly as the GST rate cut comes into effect, which really improves the overall cost of ownership to customers. This captures the growth in volumes over the different quarters and our revenue market share as well, which remains very healthy and strong. We continue to remain number one revenue market share in UVs, which really is the goalpost for us, and we're focused on staying ahead of the curve on that parameter. We launched an upgraded version of the Bolero Classic and the Bolero Neo. Both have got a very good feedback as they're just getting into the market. We launched it in the festival season. Even the higher end versions are priced below 10 lakhs. The GST reduction has helped enable that, and that has got a very good response. As many of you know, it reduces the on-road price to the customer if when products are priced below 10 lakhs. We also improved and enhanced the 3-door Thar with interiors from Thar Rocks, and again we've seen a very good feedback. Again, this has happened in the middle of the festival season, and the effect of this will spill over and roll over into the following quarters. We've retailed 30,000 electric SUVs, which is really a strong milestone. Very good feedback from customers, and we're getting very good word of mouth. But most importantly, usage analytics shows us that it is being used as a mainstream vehicle with very high percentage of customers using it at least 20 days a month, and many customers clocking more than 1,000 kilometers a month. The Batman edition, which we did extremely well, and we had a limited quantity of 999, which got sold out in 135 seconds. Anish covered the electric SUV penetration, which is at 8.7 ahead of the category, and of course the volume market share at 25%. We for the first half remain number one on the electric SUV market share. In the quarter, it was close number two, and we have some exciting stuff, as you all know, coming up, and hopefully we will see a lot more excitement as we get into quarter four. The LCV market share continues to remain strong, and the point I made earlier, you can see the growth happening in LCV volumes in quarter two after very, very long set of quarters which were flattish. The auto margins have been very strong. Auto standalone margin without the contract manufacturing that we do is at 10.3%, and I'll explain that in this chart. So you see the auto standalone margin at 10.3%. 0.3 is what we make on the contract manufacturing, which is 10 crore profit on a 2,900 crore revenue, which is how the auto standalone as reported comes to 9.2%. So this is a standard chart that we will show you along with the next one, which helps you understand the role of the electric vehicle business. So coming to electric vehicle business, we made an EBITDA of 202 crores in this quarter, which is end to end. So you see 173 crores of that is in the company Mahindra Electric Automotive. 29 crores of that is in M&M Limited as a part of contract manufacturing charge, and hence the end to end is 202 crores. This assumes only the accrual of PLI in that quarter. So the exceptionals of the backlog PLI we are keeping outside the numbers. So the PLI benefit that we got in quarter four of last year and quarter one of this year is not part of this calculation. This is just the relevant PLI benefit for the volumes of that quarter that have been accrued here as a part of the EBITDA of 173 crores. Last mile mobility had a very strong quarter, and you can see the electric three-wheeler volumes were at 32,000, a significant growth, and we continue to maintain a leadership and a very strong market share. Auto consolidated, the PBIT grew by 14%, the revenue grew by 25%. With that, I'm going to show you a couple of videos which is around the event which is called Scream Electric. It's in Bangalore on the 26th and 27th of November. The first part of that is around racing, and we believe that racing is something which is getting very popular now in India, especially with a couple of things that have happened. One is the Netflix show, the second is the movie F1, and there's a renewed interest overall in racing, and we are the only Indian team racing in Formula E, and we had a very good season the last season that we had, where we were ranked number 4 ahead of many strong pedigree brands. So we'll take a look at the racing video and then the teasers for the what we're calling the big new electric. So I think I've got to click, so here it goes. So more of that when we meet on the 26th. We will have many people from the racing team at the Bangalore event, and it should be a lot of fun. The next one is the teaser of the 9S, and there's one which we put out yesterday, and there's one which we will put out now. So here's the first one. Okay, so you would have seen this yesterday, and here's a new one which we just put out now. Thank you, Amar.
Thanks a lot, Rajesh. Well, you've seen some of these, Anish covered in detail. What I thought I'll do is I'll spend a little bit of time on this because you have pieces of this in the various pages, but just showing the contribution of each part of